Q4, Q1 too has turned out to be a disappointing quarter for you from a top line and a bottom line perspective. Was pressure felt in the railway as well as mining segment?
Yeah, I mean, see, let's not look at the profits as much as let's look at the top line. Now, the top line, we've had a slight dip because of the coal company ordering was slightly lumpy, and certain orders which we were expecting didn't fructify. It will come in the next quarter. But on the whole, in the first quarter, we had ordering of almost about 400 crores. As far as rail and metro is concerned, there was some delivery to Calcutta Metro which got delayed because last minute, they wanted some software upgrades. That took a while. So that should get sorted out in Q2 and Q3. So that's it. And as far as the defense is concerned, we've had issues with the CQA. They need to certify and clear. So that is something which has held it back. So net, I would say, by the end of Q2 and Q3, we should be back on track.
What segments do you expect recovery in, and where do you see the most traction in terms of order inflows?
See, growth this year we are expecting in all the three verticals. As I had mentioned in my earlier, I think, interviews with you, defense we are expecting at least 20-30% plus growth. Rail we are expecting maybe another 40-50% growth. It is the mining which will have another 5 to 10% growth. But net at a macro level, we should expect about 30% growth. That is the guidance that we had given at the beginning of the year, and we stand by it.
Right. You've entered into a lot of interesting JVs, mining, defense. There's also that MOU with L&T. What sort of financial contribution will this MOU provide to you?
First, we had a MOU with L&T. It's not a JV. That is going to give us access to their export markets. There are a lot of export opportunities. So L&T has a huge export, market there. So we will be able to piggyback on them. Secondly, on the defense manufacturing, there are certain facilities they have. There are certain manufacturing capabilities that we have. This is basically in the space of the recovery vehicles, making of hulls, etc. So we are looking at some collaborations there with L&T, joint manufacturing, outsourcing to each other, etc., etc. The other MOU that we signed was with HEC Ranchi. They are the IPR holders of machine called rope shovel and walking drag line, which we had produced in the past, but we do not have the IPRs now. This was with Caterpillar earlier, CGM. So this will give us access to about maybe 200 crores of business every year as and when it takes off. So these are the two that we are looking at. Plus, we are also looking at, as I had mentioned earlier, we have a tie with Hitachi for the high-speed trains. As and when that fructifies, that should give us some additional numbers. The latest is that we are looking at the Make in India Park in line with the Honorable PM's vision. We are trying to invite world-class aggregate manufacturers to set shop with us as JVs in our land next to our factories. So hopefully that should give us some traction in the years to come. So net, we are looking at and scouting for various opportunities that are available in the marketplace.
Okay, how does the order book stack up, and what order inflows are you expecting over the year?
Last quarter we had about 400 crores of order inflow. At the moment, my order book stands at 6,700 crores. Next year, next quarter, my order book should be maybe in the region of 800 crores. That is what we are expecting. There are some orders on the anvil for metro, but these are some things which take time. For example, the Bangalore metro, we have 42 number of coaches. We are expecting that order soon. Then there's another 180 number of coaches from Bangalore metro again. Then there is a big tender of Mumbai. That of course is going to take time. That is for 370 numbers. Plus there are some repeat orders from Delhi metro. That is about 80 numbers, 80 or 84. So rail and metro looks promising to us at the moment.